Hello, everyone, and welcome to another episode of How to Sell Your Vision. As always, I'm your host, Moti Elkaim, and in this podcast, the entire reason for our existence is to bring early stage founders the insights they need in order to raise successfully in today's market. This is why we're bringing CEOs and partners in venture capitals and investors who can share from their experience and give you the right insight to do so. And today I'm so proud to host Nathan Beckord, who is the CEO and founder of two companies that are super relevant for our discussion today. The first one is FounderSuite. And FounderSuite is a firm that is helped founders reach their investment and connect them with investors in the most successful way possible. And Funding Stack is a software platform for VCs that are connecting VCs together. But I'm going to let Nathan tell us all about it. Nathan, thank you so much for being with us today.
Thanks for having me. I really appreciate it. Fun to be on this.
So you're doing two really interesting things that I've never seen before. You're working on the founder side and on the VC side. Give us a little bit of background on both.
Yeah, so I'll give you the short history. I used to work in investment banking. I worked at JP Morgan Private Placement Group out in New York, helping later stage companies raise capital. Then I came out to Silicon Valley and was working with early stage companies, helping them raise their seed round, Series A. And this is in the 2000s, in 2010s, and let's say you were a startup founder. You would come to me, I would help you build your pitch deck, help you build a financial model. I would research investors that are good for you. I would put them up in a fancy spreadsheet to help you track all the discussions you're having. And that was fun, and I worked with a lot of really interesting companies. But then I'm like, this could all be done better by software. Let's build software to do this, right? Because there really wasn't anything out there. We're using spreadsheets for all this stuff. So that's what launched FounderSuite, and we're going on 7-8 years now. And we've had 87,000 startups use FounderSuite to do their raises. Along the way, we started to get some VCs using FounderSuite. Like, what are these guys doing on the platform? It's not built for them. But turns out they were, like a portfolio company, a startup portfolio company would bring them into their account. They'd work with their portfolio company account. And so we started to get VC saying, hey, I like this software, but I'm working with my portfolio company, Acme, in this, but I've got 5 other companies. How do I work with them? And so, light bulb kind of went off and like, well, let's build a platform for VCs, both to work with their portfolio companies and to raise their LPs, raise their own funds from LPs. Because just like a startup, venture funds have to go out there every few years and raise money from LPs. So that's what launched Funding Stack. We launched it in April, soft launch in April 2023 as kind of a beta. And then we just launched it about a month ago, early February, I guess, of 2024. So it's our new platform. So that's why we're doing 2 platforms. Just kind of organically grew into it.
So that's incredible because you're in this unique intersection between founders and VCs, and you're hearing both sides of the table, which probably gives you a lot of perspective on what's going on in the market today. According to Crunchbase, we are for emerging companies, we are at a very low point, actually the lowest in 5 years, where investment in emerging companies is down 50%. And with your experience knowing both sides of the table, I would really love your insight on what are the things that founders should do differently today in order to raise funds successfully.
Sure. Yeah, fundraising is down 50%. It's crazy, right? I mean, it's dropped off a cliff. But I've seen this story a couple times. I've been out here since the dot-com bubble 1.0, the first dot-com bubble, and we saw these startups getting funded. Money was easy. Money was flowing freely. And then, of course, 2002, that crashed. It was hard to raise money. Then it started to get easy again. It got crazy again. So I've seen this story a few times, and it's cyclical, right? I mean, startup funding and the venture world is cyclical, and we're just in a cycle. And I think we're at kind of the bottom of a cycle. I'm actually seeing some things. I'm actually pretty optimistic about 2024 because I'm seeing some signals, early signals that this should be a pretty good year for fundraising. Now, might not be as good as a year or two ago when things were really boom time, right? It's harder. It's still harder, definitely harder right now. And I think it will still be harder this year, but I think things are going to get easier. But to your question, what should people do differently? You can't control the market, right? The market goes through these cycles, it goes up and down. That's the way it is. You might need to raise money in a hard time. You might be lucky enough to go out raising money when there's tons of money out there. So you can't control that. What can you control? You can control, things that are under your control are how many investors you talk to or how many you target. One of the things I talk to founders a lot about is fundraising really is a numbers game. You're going to get rejected no matter what. You're going to get rejected 95% of the time when you're out there pitching investors. Just a fact. I experienced this when we raised our own round. I got rejected about 95% of the pitches I gave. And I see this with the startups on our platform. A 5 to 6% conversion rate or success rate is actually pretty good. So if that's the true, and the market's even harder now, maybe that conversion rate goes from 5 to 6% down to 4 or 5% or 3 to 4%. What do? You talk to more investors. That means, if you were originally planning to talk to 200 investors, go out there, build a list of 300 or 400, right? Just increase the size of your funnel so you talk to more people. Other things that are under your control are really putting in the time to identify the right investors. This sounds so obvious, right? But you would not believe how many startups I see go out there and they're kind of doing the spray and pray. They come on our platform, they're like, oh, I see you have 12,000 investors in SaaS in your database. How do I download that whole set and email them? I'm like, no, you
Yeah.
can't. We're not going to let you do that. So I guess the other thing you can do under your control is put in more time on the research side of things, looking for the right investors, qualifying them, make sure they invest in this just takes time. It takes time to go through their website, look at the deals they've done, try and getting a feel for, if they're active, if they have a new fund they just raised, that's always good. So putting in more time. And then I guess a third thing, what's under your control is making your pitch better, right? And this is where, you're the expert in this, but you're competing with hundreds of other startups. You're competing for investor attention. Anytime you reach out to a VC, they're getting 50 intros a day from people they trust. They're having 20, 30 pitch meetings a week. And, so you've got to stand out from that noise. You've got to rise above that crowd. And best way to do that, one of the best ways to do it is having a really good pitch. So it's just spending the time improving, refining your story, making it better, making it more compelling are things under control that will improve your odds of raising capital.
This is so powerful. I love all the points that you brought up, and I'm going to address them. One of them is finding the right investors, because I think that some founders are looking at the market and they get their heads in kind of this dire mode that I have to kind of spray and pray. But there are three things, I call them the fundraising fit triangle, that I believe if you are not going to achieve them, your success chances are really going to go down. One is founder market fit. That's going to help you increase your raising success very very dramatically. Two is investor market fit. Try to find the investors that are operating in your market. Don't just go after the 12,000 people that you have in a database.
Yeah.
Because it's going to be frustrating. You're going to get no's and you're going to think that something is wrong with your business. And the last one, and probably the most important one, is the founder investor fit. And I really am glad that you brought this up, because that fit is key, is the fundamental key to even start your fundraising journey in the right way. And the pitch, obviously, I'm not a big fan of pitch templates where I've seen brilliant founders fall for this trap and go the easy route. Your pitch, your investment is the bloodline of your startup. You have to put the right time and resources to it. And the numbers, of course, the more you pitch, the better your success chances are, but pitch more to the right people. So I love the way you combined those three together.
Let me add one little quote on that, and I didn't invent this. We have our own podcast called How I Raised It, and I've interviewed a lot of founders, and this is one of our guests. I should remember the name to give her credit, but I love this quote that she said. She said, "Fundraising is not about convincing people about your business. It's about finding the believers. In other words, finding the people who are already looking for your type of deal." Right? I mean,
Love
that's
it.
yeah, it's a simple concept, but it's actually a brilliant concept. Like you want to find the people that are looking for a fintech deal in the New York region at Series A stage, or a growth stage, or even earlier stage, right? You're looking, you know, you want to find the people that are looking for your type of deal, and that takes work on your part. But when you find that, it makes your job of fundraising way easier. So,
I think you
yeah,
just gave me the teaser line for our podcast when I'm going to announce it on social media. This is such a brilliant line. This is perfect.
I
Um,
love it. It's sort of changed my thinking about fundraising in some ways. I mean, it's still a numbers game. You still have to talk to a lot of people, but you're searching for believers, right? Searching for people looking for your deal.
got it. So you're seeing a lot of investors, and especially for early stage companies, seed round, A round, who are listening to this because they are the core of our audience. Um, what would you say is the one thing that investors look for the most in founders and the way they pitch? What ticks it for them?
You know, God, it's one thing is hard, right? Because it is multiple things, but investors are humans. Investors want to have like an emotional connection or emotional reaction to your startup, right? Um, and it's hard to define this. It's hard to give people instructions how to create that, but you know it when you see it, right? You've sat through pitches where you're like afterwards, like, holy cow, this is just like I kind of felt it. I almost felt it in
Right.
my bones.
The energy was there, right?
Yeah, the energy. I mean, and that's why it's hard to say one thing, because that feeling comes from having multiple things, having like a good, strong emotional component to the pitch. Having obviously the financial piece to it too. Like, hey, I really resonate with this guy's mission, but also I can see how it's going to make me a lot of money. That's always good too. Um, and a lot of that comes down to like having a good story, right? Maybe it's your backstory. Why are you doing this? What did you do before that's given you this insight? You've identified this problem. You're the unique person to solve this problem. Or it could also be the vision story, right? Like I'm seeing the vision, I'm seeing the future, I know where the future is going, and here's how I plan to get there. So it can have a couple different components to it, but um, you have to put yourself in the shoes of the investor sometimes. These guys and gals are sitting through pitch after pitch all day long, and a lot of them are pretty generic and kind of boring and dull, and then one comes in where the founder just has that great story, that energy, the founder market fit, like you said, right? Like, bingo, this is the one. I want to write a check on this founder. It's kind of hard to describe, but you know it when you see it. Yeah.
It's interesting. It's one of my favorite questions to ask in my interviews, and rarely, but rarely do I get an answer that investors are looking for the technology and the market size. And the reason I bring it up is because when founders are coming to me to help for me to help them with their pitch, they're obsessed with the technology and the market size.
Yeah.
They have the notion that I need to present this golden business opportunity first. And if I'm not going to show this unbelievable TAM, no one is going to invest in me. And you almost have to kind of take them through this journey and say, look, it's the emotional connection first. The technology is secondary. The market size is secondary. And the reason they're secondary is because they're irrelevant without you. So they have to connect to you first. It's interesting to me that you brought it up, and I found it very powerful and very true.
Yeah. Was it probably getting his name wrong, but Simon Sinek, I think.
Yeah.
Yeah, who says don't focus on the what, focus on the why, which kind
Yeah.
of ties to this, right? I love that phrase too, right? Why?
Yeah.
Yeah.
Exactly. Why are we here? And it's an emotional connection, and you have to appreciate it. And sometimes the way to get the business is not necessarily by talking the business. It's really connecting people to your vision. So I'm glad you brought it up as well. So from your experience, you've seen a lot of investors, and the market is down. Um, we've made the connection. We created this energy, this path. When it comes to the numbers, and especially in early stage companies, are we looking at traction more than before? Are we looking at ARR more than before? What kind of a role does that play for an early stage company these days, in comparison to 2 years ago?
Yeah, it does. It does become more important, right? When it's a tough market. In a booming market, and you're actually seeing this, even though the market overall is down, like you're seeing this in some categories like AI startups, right? Where these AI startups are raising tons of money just on a vision and a story. But for everyone else, the numbers have become much more important. And frankly, again, because investors are they're skittish, they're a little more wary. And so if you can go in and show, hey, I'm able to grow this startup in a tough market right now, X% month over month, that's compelling, right? If this guy or gal can grow a business in a down market, what could they do with venture capital in a future booming market, right? Like that's exciting. And of course, founders just need to know their numbers in general, right? You've got to know your growth rate, your unit economics, and be really fluent in those numbers and be able to pitch them and understand how taking money and pouring more money into the business can change that business in a positive way, right? These are all good things to know. But I mean, short answer is yes. Numbers have become more important. Growth, traction becomes more important in a down market. So, but I still do see some deals happening that are still pretty vision based. So it's not like those are impossible, but
Right.
it's a little harder. Yep.
It is a bit harder in today's market. I agree. For those who don't have the traction, they don't have the numbers, but they do have the vision. A lot of the time they are very worried that they're almost frightened by the fact that they don't have the numbers, but they do realize they need the money. How would you advise them to position the fact that they don't have the numbers yet? So they have the vision. How do they go about, well, the investor is saying, show me your numbers. How do you go about it if you don't have the numbers?
So there's no easy answer to this. I was on a conference call yesterday, uh, and this similar question came up, and my answer was it was from a startup. She's like, "Oh, I don't really have great traction, great metrics. So what should I do? Should I go raise money?" And my answer was, it's almost easier to raise money when you have no numbers, no metrics, or when you have great metrics. But when you're in between, where you have some numbers but they're not very interesting,
Right.
it can be hard, right? Because then that's a good reason for investors to pass on you and object to what you're doing. So again, this isn't really great advice, because what do you do if you're in that middle zone? Um, Either wait until, go back, focus on your business, wait till your numbers improve. Um, I'll share one little example. Like, I actually tried 3 times to raise capital for Founder Suite in the early days. And I went out, talked to investors with certain number of metrics and traction. I talked to a bunch of investors, wasn't getting anywhere, right? No one was interested. I tried again like a few months later, still wasn't getting anywhere. And then I went back and just, did side gigs, hustle, consulting gigs to bring in some revenue, which I put back into the product, into the marketing, and came out a third time with better metrics, and finally was able to raise capital. So sometimes that's what it takes, right? Just you got to keep pushing the rock up the hill or forward until you've got the right metrics. Like, these aren't easy answers, but that's often what it takes. So keep moving,
Yes.
keep going, keep building, keep growing. Yeah.
Just hustle for the numbers. If you don't have the numbers, just hustle for the numbers. It's as simple as that. That's what you're saying, and I love it.
Yeah. Yeah. Exactly.
That's very cool. We are reaching the end of our time with this interview, this brilliant discussion, I should say. So many powerful insights that came out of this discussion. For everyone who is listening, if you're a founder of an early stage company, Founder Suite. If you're a VC, an investment office, Funding Stack. Reach out to Nathan. I can positively say, Nathan, right, that you're open for people to reach out to you. Is that safe to assume?
Yeah, absolutely. Nathan at Founder Suite, also on LinkedIn, Nathan Beckord. Love to connect. Maybe mention that you heard about us on Moti's show here. That would be great, just to connect the dots. For sure.
Sounds very good. Thank you so much for your time today, Nathan. That was beautiful and brilliant. I really appreciate the conversation. And for everyone tuning in, listen to Nathan, reach out to Nathan. Tons of insight that can help you in your fundraising journey. Thank you so much for tuning in to How to Sell Your Vision.
Thank you, sir. Appreciate the letting me on.